Folks, as you know, undoubtedly 2025 is coming here in a minute. 2024 is behind us. We've been talking real estate on this channel for 5+ years. We've been talking with Mr. Lance Lambert, Resi Club, for several years now. And he just wrote an article this week that we have to pay attention to. He highlighted in his article the most important metric you and I should be paying attention to in 2025. All right, Lance, as an economist, I know there is lots of metrics to follow, but I want to know, what is the most important metric myself and, more importantly, my community should be following for 2025?
Yeah, housing. Thank you for having me on. Zuber, let me share my screen and then get right into it. So I
All
did a
right.
story this week looking at the most important metric for the housing market to be following heading into 2025. And many of the traditional metrics have struggled in this turbulent environment in terms of figuring out pricing, right? Months of supply right now, it's not that high, but in some of these markets, they're buyers markets, right? Despite it not even getting up to 6 months.
No doubt.
I do have a metric that has proven very effective for pricing this cycle. And what it is inventory in your market now versus what it was in 2019. Now, you could do an average of 17, 18, 19, but for most markets, just taking 19 is great. So you take your most recent month's active listings. So if it's, what month are we in? October 2024, dividing that by what was in 2019 and then -1, and that's the percent change, right? And the reason that this is such a powerful metric is that everywhere across the country, active listings went really low as the housing market overheated and demand just outmatched the supply of the market and absorbed that inventory, right? So things were flying off the shelves and inventory went real low. Well, some markets in the country have still stayed tight there for low active listings. And what it is the fever has just not broken enough in that market, right? That to move the equilibrium to the market to a place where prices are flat or maybe prices are even down a little bit. And so that active listings bouncing back up is that signal, right? The fever has really broken. And so here is home prices since 2022.
Okay.
Anywhere that's in the blue here means prices are above their 2022 peak, right?
Okay.
Anywhere that is red means that home prices in that market are below their 2022 peak. Now,
Okay.
this axis is inventory now versus 2019. So
Interesting.
if
Okay.
you are beyond the zero here, heading to the right, your inventory is above pre-pandemic levels. If your inventory is to the left of the zero marker right here, you are below pre-pandemic inventory levels. So you will see that the markets where inventory has stayed very tight are the markets more likely to have seen prices continue to move up a bit. And where inventory has really picked up, gone near or above pre-pandemic levels, they've either seen a real deceleration there in price growth or in very flat or some outright gains. And so this map down, this scatter here, same exact scatter as this one, just I color coded it for the inventory. So you can really see this
Got it.
inventory is back. This side is where inventory is still below. And this black line here is the trend line, the statistical trend line. And you will see there's a clear relationship between the markets where inventory has increased or back to pre-pandemic levels are more likely to have seen prices fall from their 2022 peak.
So
And then
another way to look at this, again, just you could put basically 2019 inventory as the denominator, and then you could put 24 October inventory in the numerator. And if the number is less than one,
yes,
it means, one direction. If it's more than one, it's another direction. That's how my
yes,
brain looks at this.
exactly. And so for pro members, they can go through here and look at their market and see where they are with prices and where they are with the inventory. And the bubble size is by the number of active listings in the market.
Oh, wow.
You will see Austin as the market where inventory is 40% above and prices are 20% down. And Punta Gorda, those are the two hardest hit with price declines. Inventory is up a lot there. And then these
Yeah.
Syracuse, Rockfords, Connecticut's, these New Jersey's, this Northeast, and some of these Midwest markets are where price growth has been more resilient and inventory is still fairly tight. They're still over.
I have a crazy question for you. You have so much data on this. You're probably the only guy on the planet that could build this crazy chart. One of the things that happens in the stock market is you can map out different categories, right? Uh, Durable goods,
Mhm.
staples, tech, utilities, and you can map them out over time and see how the momentum is changing.
Mm.
I wonder if you took like the top 10 or top 25 cities, did this exact chart, but kind of as a time, like every 90 days, and then we could watch the circles move. Because I
Yeah.
think what we're missing here is kind of the movement or lens of what might be coming. But I think it'd be fun, even if you just mapped Austin for like the last 5 years. It'd be fun to watch Austin move on this chart, because it always wasn't down, whatever that is, 20%. You know what I mean?
Yeah, that makes sense. And the way that I think about this thing here, this is the supply demand equilibrium of the market, right?
Absolutely. Yep.
And so that and I would bet that even heading forward, if you use price from some recent period, a peak, right? And
Yep.
then use just your most recent historical average for inventory. You don't have to go back real far, but
No,
just
yeah, I agreed.
and see those moves, yeah, you'll catch it in there. And the powerful thing about active listings as a metric for home prices is think of it, like I said, the equilibrium of supply and demand, right? So if housing demand surges, homes fly off the shelf, local active inventory may begin to fall, right?
Yeah,
And if it
correct.
goes beyond the seasonality and that drop is really big, it can suggest a heating up market, right? And that's what we
Hmm.
saw during the pandemic housing boom. Things flew off the shelf, inventory got fairly tight. Conversely, housing demand pulls back, home prices sit on the market longer, active inventory begins to rise. That suggests a cooling market. And if it happens enough, home prices could fall. And that's what we've seen in some of these markets um, since the pandemic housing boom fizzled out. And one more time, these are the map versions, and you will see the relationship very clearly here, where it's this Gulf area and some of these parts of Southeast and Southwest, right? And the Mountain West, where things really boomed, prices went up even more there. And they've since seen a pullback in the work from home migration. So local incomes have to support the home prices more. And then, oh, by the way, the other thing these markets have is a lot of new construction
Yeah,
as that
they're
came into
building.
the market.
Yeah.
Builders do the buy downs, the affordability adjustments. It puts the resale market at a disadvantage. Existing home sellers have to take a little longer to sell. Inventory builds, right? And so
Mhm.
this is active inventory now versus 2019. Green means you're above pre-pandemic levels. Dark brown means you're far below it. And you will
Can
see
you
the
just
north
highlight Vegas for me real quick?
right there. I
Yeah.
could hover over it here.
Oh, okay.
Vegas is an interesting one where if you look at the September 2022,
Wow.
it shot up really fast, right? And there was that give up there for a little bit.
Yeah.
That was just like the Phoenix one,
That's the
where
iBuyers leaving the market.
exactly it's the iBuyers. Yeah, Redfin liquidating out.
Yeah, look at that. Look at that. This looks like an outlier.
Yeah, they're the two
That's
biggest.
iBuyers giving up.
Yeah, two iBuyer islands right there. Yep, for
Yeah, it's
sure.
crazy. Wow.
And so that's the great thing about this. I do this for pro members every month. You can go in here, see what your month is now versus, recent history. You can see down in these Florida pockets where, it's building and
Yeah.
now it's above pre-pandemic levels. They really softened
Yeah,
these.
and I was right. You have all the data. You could build it, like you could map, in this case, Hartford over the last 6 years or whatever that is, and look at it on horizon. You take this with inventory and price, and you could build a chart that really shows a picture of how it's moving over time.
Yeah, for sure. And then here's prices, right? And this is down from peak. So some of
Mhm.
these Western ones and Mountain West, some of this is still
Question
from,
question about the peak. Did you pick the peak for like everybody is, I'm just going to make this up, May 2022,
no,
or
no,
did you
no,
pick
I don't
peak
do it
for
like
each
that.
city? Okay.
Yeah. So like Reventure, they do June 2022. What I do is I take every market's individual 2020.
Individual peak. Oh, wow, that's so much better.
Yeah. Yeah. And so, yeah, every market, their individual peak, I take it for 2022. And
Okay.
so,
Got it.
and I think that tells a story to kind of compare it to that
For
high from
sure.
that. I think it's a good one to use. And the reason that Florida isn't a little redder here is that because, yeah, they've had some give up this year, but they were actually still fairly strong in some of these parts after the
Mhm.
peak. Like it took longer for them to kind of come out of the pandemic housing boom than some of the other markets. Whereas the West, literally March, April 2022, May 2022, the West
Done.
shifted very,
Yep.
very fast, rapid.
Correct.
And then some of these declines out West are actually lingering from declines second half of 2022, and they've
Mm.
since kind of tightened up. And Southern California in particular, they
Yeah,
had
look at
declines
that.
2022, and then they've since regained those. Las Vegas is essentially a flat market from the
Yep.
peak. Phoenix is still down some from what happened in the second half of
Yeah, but think
2000.
about Vegas, right? We just showed in the other map, inventory went up 150% because of
Yeah,
iBuyers exiting. Once that's absorbed, you're right back to where we were.
yeah, exactly. And so a few last thoughts here. A rule of thumb in real estate is anything below 6 months of inventory is seller's market. Anything above that is buyer's market. However, it's hasn't held us true this cycle. In Resi Club's view, is it's a bit outdated.
I
That
totally
rule
agree.
of
It's
thumb.
not 6 months anymore. Totally agree.
Austin's metro area inventory, and you can get this from Texas A&M Research Center.
Oh, look at
Let's
that.
see
It's all in,
here.
it's all linked. Look at you.
Yeah, yeah. Monthly. Let me see if I do. Yeah, this is a really great site if you want good Texas data. They have all the markets. They do really
Oh, well,
good.
look at that. Yep.
Okay, so Austin, they've only gotten up to 4.8 months of supply. And they've had depending on what index you look at, they've had between a 14 and a 20% drop from the peak. And
Yeah.
so active listings in Austin got as low as,
Look at that. 0.35.
I don't even
Uh,
know if that's not even 2 weeks. That's like,
That's
that's,
crazy.
yeah. And the thing is, yeah, and yeah, it's wild. And essentially that means everything is just selling immediately.
Yeah.
Now what happens here is that home prices in Austin peaked this month, May 2022.
Okay.
But the real signal here was these active listings shooting up from 0.3 to 2.1.
Oh, yeah.
That
That's
move, that break, that was the fever breaking in the market. And so by this time, right here at 3.16, they were already down 10% for
Yeah, you're
prices.
already having price cuts. You're already having competition from sellers that are just going, get me out, get me out.
You know what the craziest thing is?
Uh-oh.
Is
No.
that Austin, because they were moving up so quickly, even though
Yeah.
they were down 10% by here, that
Yeah.
only took them to like back to here for
Yeah,
prices.
exactly. Yeah.
It's
It's
just
only a
like,
couple months.
yes. Which is one of the things, if you look at the data, there's not very many people underwater in Austin from
Hmm.
CoreLogic places. And the reason is that the peak was just so fast. We
It's just,
blew
yeah,
off
there's no
fairly quickly.
transactions. Yeah, exactly.
Yeah, I mean, it's gotta be, and I don't think there's ever necessarily a good thing if prices are down 20%, especially for investors or
Hmm.
homeowners who bought at the
Yep.
very top. I'm sure there's some people who are
Oh, yeah.
pinched, but this has got to be the healthiest 20% drop ever because it just blew
Exactly.
off so
Yeah.
fast.
It's a blow
That
off. It was a blow off
that was
top.
the
Yeah.
bad thing about the 05, 06 is that
Yes.
we stayed at the top so long and there were so
Exactly.
many transactions at the top. Whereas Austin, I mean, in a couple months, that's all that was at that 10 above 10% peak.
Yeah. Yeah. Love
So
it.
a little outdated on the roll. And Austin has still not even gotten up to 5 months from according to Texas A&M. I think this piece makes it clear why for Resi Club Pro, my premium readers, I do my monthly metro and county level inventory analysis, my Lance Lambert inventory tracker, and then I also do my monthly metro and county level home price tracker, Lance Lambert house price tracker for my pro members. And then one more thought. Over time, this metric, comparing monthly active listings to pre-pandemic levels, it could prove less effective over time to
Yeah,
determining.
time degradation. Yeah.
Yes.
Yeah.
But heading into 2025, I expect it to stay fairly effective. I think at
Oh,
this
I agree
cycle, I think
100%.
it's still
Yes.
a very strong metric. And so thank you for giving me time to overview.
So just to summarize for, again, the viewers out there, the most important metric to follow for 2025 is what?
Active listings in your market compared to the same month in 2019. And
There you
if
go.
you're about the same level, it probably means that your market is really cooled off. It could even be a buyer's market at the moment. And
Yep.
there's some competition. There's probably some deals to be had out there. If active listings in your market are still far below where they were in 2019, you might still be a tight market, right? And you might go
No
into next
question.
spring and it might still be more competitive than you would like. And again, this is active listings. This is not new listings, active listings.
So, folks, let me just tell you what I would do with this information. I would go back to my buy box or my city, go search the 2019 active listings for this month. Again, you could get that on Resi Club, Resi Club Pro, ResiClubAnalytics.com. Go register. And then look at your active listings today. If you put 2019 on the denominator and 2024 on the numerator, if the number is greater than one, buyer's market. Find buyers, write disrespectful offers, look at days on market, do the work. If the number is below one or substantially below one, sorry, seller's market, tight. There you go. That's what I would do with this data. What do you think?
I love it. And then the only other note that I would add there is that if you see active listings at any given time break upward or down faster than seasonality, there's a story there. Something's going on.
Great advice. Love that because it is rate of change at the end of the day. Lance, where can people go get this awesome information?
Yeah, so you can go to Resi Club Analytics to sign up for my newsletter that I send out several days of the week. I also have an additional 3 stories a week that I do research stories for Resi Club Pro members. That's my premium tier. You can find information on Resi Club Analytics for that. And then also follow me on Twitter at News Lambert. I'm tweeting out a ton of stuff, trying to get insights from different people across the sector and closely watching mortgage rates.
Folks, again, you got to follow him on Twitter or X. Tell him you came from one rental at a time. Show this man some love. He gives us so much value each and every week. And of course, Resi Club Analytics. Go sign up for the newsletter. Why haven't you done that already? Thanks, bud.